All right, wrapping up 2025 in the Marin County real estate market. It's been a very nuanced year, a lot of challenges, a lot of uncertainty, a lot of not knowing what's around the corner. So as we head into 2026, I think that we are going to have a little bit more, dare I say, normal market. There's still a lot to that's unknown, as we try to look around the corner, but here's a little look at what we learned from 2025 and what we can expect to see in 2026. So, this is me. I'm the founder of Journey Real Estate here in Marin County. And looking at 2025, we saw several stories take place. Rates stayed higher than I thought they would, than many thought they would throughout the year. And that is mainly due to inflation being a little bit more sticky than we thought. It has been trending down, but that played a big role in a lot of decision making. Sales volume was also suppressed. A lot of people are tied into these 2.5%, 3% interest rates, and it really didn't make sense to make a move when interest rates were at 7 or even 8% the last couple of years. So that less inventory also kind of protected the prices, just because there wasn't a lot of options out there. And the demand was more selective. So we'll kind of get into that, but buyers had choices and they were picky, and they should be. Um, and looking at kind of a national inventory outlook for 2026, this is a survey from several sources, Bright MLS, Compass, Realtor.com, and what we're seeing is all these projections are expecting inventory to rise between 9 and 11% in 2026. And so that'll be a good thing. Buyers will have more choices. There'll be more activity in the market. It'll stimulate the economy. And more inventory, we're still well undersupplied. So more inventory doesn't necessarily mean there's going to be an oversupply or a market crash. It means there's more choice, less pressure. Buyers will have more time to make decisions, evaluate options. And what I've noticed is with lack of options, there's also lack of decisions. So inventory unlocks decisions. When people have options, they move forward. Here's a chart on the left as well that talks about national price growth expectations. And when you're looking at pricing, this is a survey across NAR, National Association of Realtors, Wells Fargo, Realtor.com, Capital Economics, Fannie Mae, Reuters Housing, Zillow, Redfin, Bright MLS. There's only one, which is MBA, that notes that they're expecting home prices to come down, and that is by a whopping 0.3%. So the average across all of these um, different forecasters is that prices will appreciate by 1.6%. So that's nothing crazy. We're used to, a market that appreciates by 6, 7, 8%. Marin County, sometimes more. We're in a high appreciation market versus middle America. But all signs are pointing towards price appreciation as rates come down. And that is what I'm seeing early in this year. We're still in early January, mid-January by the time I'm shooting this. And we're seeing a lot of activity out there and clearly not enough homes to choose from. So it's slower growth, not decline. I know there's a lot of doomers out there that are saying we're about to fall off a cliff, and I know there's a lot of chaos in the world, and we don't have a crystal ball to predict how the macroeconomics and international conflict and politics will play out. But from a strictly real estate standpoint, we are expecting house prices to actually appreciate this year. So that's good news if you're a seller. If you're a buyer, you can bank on the fact that we're not seeing the crazy prices go nuts like they did in COVID, but we're seeing a slow and steady market. Um, Different regions are performing differently. So, and that's always been the case through COVID. Markets like Texas and the Carolinas really blew up, and now those have slowed down quite a bit. Um, so it's a healthy market signal. Moderation is not negative. It's a sign of balance in the market, and it's better to not have extremes, in my opinion, so people can make grounded, sound decisions whether they're buying or selling. Mortgage rates changed in 2025. So here's a little graph of mortgage rates throughout the year, and you like to see it moving in this direction. So we're heading in the right direction. Um, they started to trend lower basically early in the year. It's kind of a roller coaster on the way down. But just last week, we saw rates hit the 5% range. It was 5.99, but it had a 5 in front of it, had a 5 handle on it. And that's the lowest they've been in 3.5 years. So that's a promising sign for everyone. We're all kind of hoping that rates continue to come down, which would also indicate that inflation is under control and it would help everyone kind of get from point A to point B. If you're wanting to downsize, you can start to make financial sense out of it. And why 2026 feels different. If you tie all the data together, there's a lot of dynamics at play here. And I don't pretend to be an expert at all things, but I have watched inventory closely. Um, I do, I'm pretty confident there'll be more inventory on the market this year. Rates have stabilized and have become a bit more predictable, and they're trending in the right direction, as I mentioned. And then patience is wearing thin. There's been a lot of people on the sidelines for years that have been just waiting to make a move, but they felt like they couldn't because there wasn't inventory, rates were too high. Ultimately, people are getting married, they're having babies, they're having big life events, there's deaths, there's divorces, there's diplomas, there's all the D's, right? The diamonds. Um, and at a certain point, you just need to make a move and you can't line up your timing perfectly with market conditions. So price growth has definitely slowed down, but there is an expectation for moderate appreciation ahead. And that's kind of simplified at the bottom here. Lower rates plus more homes plus slower price growth equals better affordability. So affordability is definitely an issue. There's no denying that, but we're seeing improvement. So we'll take it. Um, Local inventory in Marin County has seasonal trends for sure, and it varies. Marin versus, a ski resort in Colorado, we have kind of like opposite seasons. But here in Marin, we usually see peak inventory in late spring. We kind of target February, mid-February. The Super Bowl actually is kind of a date we look at as realtors as the start of the spring selling season. In spring is when we see the most buyers out and about. We see the most price appreciation. And I'll share another chart later in this presentation. But if you just look at total listing count, you can see that, around the holidays, it's obviously low for obvious reasons, shorter days. It's not ideal to list a home in the dead of winter. But early in the year, we're seeing some good traction for sellers that come on early and kind of beat the competition. And inventory tends to rise throughout the spring. There's a little bit of a dip in July and August. A lot of families are traveling, people are distracted, doing other things, and then there's another uptick in the fall. I always tell my seller clients, you're not really in an ideal position if you're coming on the market anytime after Thanksgiving. And generally, I've said like before Super Bowl, although we just launched a listing in Mill Valley and it's been super busy. So there's something to be said about early to the market. I'm not opposed to that strategy. Um, and you just want to keep an eye on seasonality. It's not something you need to time perfectly, but it's something to definitely be aware of. And over the years that I've been doing this, I've noticed a lot of trends. What weeks are busy? You don't want to come on during a major holiday when school's out, when everyone's out of town, so I could help guide you if you're considering a sale just to not list in a poor time. Marin County days on market, there's a graph here that just shows kind of what I talked about. So December, January, dead of winter, homes that are sitting on the market, they're usually pretty motivated sellers. And it tends to be the stuff that just didn't sell in other times of the year. And as the spring season picks up, the days on market go down. So if you're a seller, you like low days on market, that means your house is selling fast. If you're a buyer, you like to see higher days on market. But I will say in the springtime, March, April, May, we also have way more inventory. Homes are just moving quicker, so you have to be well prepared, ready to make a move. Um, and again, don't try to time it perfectly. Winter's a great opportunity zone for buyers. They can see how a house performs in the elements with rain, how drainage is working, if the roof is up to snuff. Um, So we're always looking at different dynamics and different opportunity zones depending on if you're buying or selling. And yeah, no surprise that the fall and holidays tends to be slower. Um, Homes with friction. This is an important one. In 2025, we saw kind of a story of two markets. Homes that were well priced and or well prepared were selling really fast, and then there was a lot of homes that were just sitting on the market without much activity. So there was a little bit of a misalignment between what sellers were expecting and what buyers were expecting. A lot of sellers saw their neighbors sell in 2021 at this crazy peak price when rates were, 2.5%, and they're wanting that same outcome. Whereas in 2025, not everything was selling. The good stuff was selling. And I have a phrase, if it's not compelling, it's not selling. So it either needs to be a compelling home that's well prepped and well priced, or just a really compelling price. So someone feels like they're getting a good deal, good value, because buyers are taking their time to make choices. And I think that will become a little bit more normalized in 2026. It's not a one-speed market. Preparation and pricing strategy matter more than ever. This graph talks a little bit about Marin County median listing prices too. And usually you will see this where it's lower around the holidays, price appreciation through the spring, as you'll see. A lot of times we'll see peak prices around April, May, June, just depending on the year. This year they peaked, in the summertime, which is a little unusual, but we've had such little inventory that this data is kind of taken with a grain of salt. Um, and yeah, Marin County remains strong. There's not a lot of inventory. There's no new construction here, virtually no new construction, unlike Middle America, where you can just kind of build out. Um, and what it means for buyers is while prices did remain elevated due to limited supply, the combination of more inventory and stabilizing rates creates a better buying condition than we've seen in years. So patience and preparation pay off. My dad always used to say, proper preparation prevents poor performance. So similar to that. What to do next if you're buying, selling, or investing in Marin County or Southern Sonoma County? 2026 offers real opportunities, but only if you approach it strategically. In 2020 and 2021, if you're a buyer, you're throwing Hail Marys all day. Highest price, waiving all the contingencies, waiving all your rights, just to give you a shot at getting a home. Now it's not like that anymore. So you really need to work with someone who knows the market, knows what's going on, knows how to implement a strategy that suits your situation, suits your timing. So I encourage you, whether it's me or someone else, to work with a local expert who knows what's going on, knows where the off-market inventory is, how to find deals that are not on the major websites like Zillow and Redfin. If you're a seller, it's important to prepare thoughtfully too. So if you can vacate the house, that's ideal. Get paint, flooring, staging. Everyone's shopping online these days. We're living in an Instagram economy, so everyone wants to see the shiny objects online. So we want to position your home to present in its best light and ultimately put more money in your pocket in the shortest amount of time. Talks about timing, which I've already kind of touched on. And if you're ready to make a move in 2026, or if you're just looking for some guidance, I am never too busy for new business. I have a great team. I work closely with my clients, and I would be happy to help. So reach out anytime. My number's here. It'll also be in the notes, and I look forward to hearing from you. I hope you have a fantastic 2026.